My portfolio just crossed a pretty significant milestone. But you know what? I'm not celebrating. Not yet. Instead, I'm rebalancing and thinking harder than ever about the road ahead. So today, we're going to take a look at exactly what I'm holding, what I'm trimming, and what I'm watching very, very closely.
So here's the number, 84,000 pounds. It's a milestone that just feels different. This isn't about popping champagne. For me, it's a serious checkpoint. This is that moment where you just have to pause, take a breath, and get a whole lot more deliberate about every single move you make from here on out.
And this quote right here, it absolutely nails the feeling at this stage. Every percentage gain or loss has real weight now. You're past that initial anything goes phase of just throwing money at things, but you're definitely not at a point where you can afford to be careless. It's a really critical transition.
So yeah, this checkpoint really marks a strategic shift. It's all about moving from a phase of aggressive, maybe even scattered accumulation to one of really intentional, focused portfolio management. This isn't about going faster anymore, it's about getting smarter.
All right, so let's pull back the curtain and get transparent. I'm going to show you exactly what's in the portfolio right now. The core holdings, the positions I'm trimming back a bit, and the assets that are on my watch list for the future. No fluff, just the real deal. So this is the backbone of the portfolio. NVIDIA is the biggest position. No surprise there, it's the undisputed AI infrastructure leader. Now with the AI sector running so hot, I'm holding tight, but you better believe I'm watching that valuation like a hawk. Palantir is a really high conviction play for me. It's a rare beast that operates in both government and commercial AI. I might even add more on any significant dips. Then we've got the semi-exposure with AMD and ASML, which are they're essential for the long-term AI build-out. And finally, you have Alphabet, Amazon, and Broadcom, the big established leaders. I'm actually growing my Alphabet stake. It just looks really attractive now that some of the market hype has shifted elsewhere.
Okay, but rebalancing means you also have to know when to trim. I've taken some profits on AMD, not because I don't believe in it, but just to manage its weighting after such a strong run. With NVIDIA, it's simple. I'm just not chasing it at these highs. Then you have the more speculative, high-risk plays like Joby and AST SpaceMobile. I'm not adding to these, and I'll be watching them very, very closely, ready to exit if the macro environment starts to shift against them.
So, looking ahead, these aren't in the portfolio yet, but they're absolutely on my radar. Tempest AI had a really strong IPO, and it could be a major player in AI healthcare. I'm also digging into Darktrace, a UK-based AI security firm with some serious potential. But notice that last line? Cash. I am actively working to hold 10 to 20% as dry powder, ready for the right opportunity to come along.
Okay, so we've seen the what, the specific stocks being bought, held, and trimmed. But that's only half the story, right? The much more important question is, what's the why? What's the core strategy that's driving all of these rebalancing decisions?
Well, the core strategy here is really a fundamental shift in mindset. It's about moving away from chasing every new shiny opportunity and really focusing on consolidating gains. This is about being deliberate and thoughtful, not reactive and impulsive.
And a key part of this new strategy is how I view cash. It's not idle money sitting on the sidelines, it's a strategic position. Holding 10 to 20% as dry powder gives you immense flexibility. It lets you take advantage of market dips without having to sell your core holdings. Honestly, it's an offensive move, not a defensive one. You know, at this portfolio size, the single biggest risk is often yourself. It's that temptation to constantly tinker, to overthink every single headline, and to overtrade your positions into the ground. So the new goal is simple but incredibly powerful. Just slow down. Be patient. Let your thesis actually play out.
And to enforce that discipline, I've developed a clear, actionable set of rules for myself. You can think of this as the playbook that's going to guide every investment decision from this point forward, making sure that emotion doesn't derail the long-term strategy.
And here it is. Number 1, hold your high-conviction plays through all the noise. 2, only add to positions on significant, meaningful dips, not these little fluctuations. 3, don't chase headlines. By the time it's in the news, the real opportunity is often long gone. 4, as we talked about, treat cash as a strategic asset. And finally, number 5, which might be the most important one, trim your positions when you feel euphoric and the market is greedy, not when you're scared and the market is fearful.
Ultimately, this whole rebalancing effort, it serves one overarching philosophy. It's not about quick wins or timing the market perfectly. It's about resilience.
Real generational wealth is built by having the patience and the strategy to survive market cycles and play the long game. So, as we wrap this up, I want to leave you with this thought. Every portfolio tells a story of your decisions, your discipline, your goals. This 84K mark is just one chapter in my story. The real question is, what chapter are you writing in yours?